Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. I'm joined today by David Cates, Denison Mines CEO, and Jason Barnard, foremost clean energy CEO and president. Gentlemen, thank you for coming.
Yeah, happy to
Thanks,
be here.
Lucian.
Becoming a regular, Lucian.
Yeah, definitely.
Cool.
Jason, I would like to start with you. You are my guest for the first time. 2024 is not over yet, but we can say for your company that it has been transformational year, definitely, marked by series of strategic business developments, and one of them is the option agreement with Denison Mines. Jason, first question. Walk me through these developments and especially tell me more about this deal with Denison and key highlights from this deal. As far as I understand, this agreement has multiple phases. Tell me more, please.
Yes, thanks, Lucian. Yes, transformational deal with Denison earning into 10 prospective properties, and we'll be earning in a 70% interest. And in return, Denison will become a 20% shareholder of Foremost, and they will retain a 30% interest in the properties. We will fund the projects going forward, and we will be the operator, although we will get technical expertise both from Denison and our team. So we'll be financing the exploration go forward. We have a $6.5 million budget set for the next year, and I'll report to the market on that in the near future. And we will also get two members of Denison on our board. So right now, Dave Cates is on our board, and we're happy to have him. And at our AGSM, our annual general and special meeting that is coming up this month on December 20th, we will get Amanda Willett, and she is the corporate secretary for Denison. So we will welcome her onto our board. So good representation from Denison. And we are excited about going forward with the exploration. We have representation and financial support. Also, we recently did a $10.5 million financing in which Denison took $1.8 million of that financing. So we, are moving forward with these exploration properties. Some of them drill ready, I feel discovery ready, and that's sort of a quick synopsis. You can go to the news release, which was last month on the closing of the option agreement to earn into 70% of these prospective properties, also for information.
Yeah, Dave, why do you believe that Foremost is the best choice, the best partner to have on those 10 projects?
Yeah, great question, Lucian. Look, these are properties that for Denison were unlikely to be worked in the next 3 to 5 years, and some of your followers have probably heard us talk a little bit about our focus on mining with McLean North and development at Wheeler River. We're also very interested in exploration and discovery. And so we have prioritized a group of properties in our portfolio that are around Wheeler River and maybe more closely related to Waterbury and McLean as our top priority projects because they can really add to our development assets. But we do have a vast exploration portfolio, and this transaction was a way for us to take projects that were unlikely for us to work in the next 3 to 5 years, put them into a good company that we would have significant investment in and ownership still in the projects to ensure that they actually received exploration attention during this time, because we really are seeking ways to amplify our exposure to discovery. And so there were many options for companies that we could partner with. And many of them were companies or groups that were seeking simply to capture assets for the purpose of promotion, shell companies, et cetera, et cetera. These were not really of interest to us because of the risk that the properties would then not get the exploration attention that we'd want. So importantly, there were a few key elements with Foremost, which is why we chose them for these 10 projects. And maybe I'll just walk through them quickly. One of which was their willingness to structure the transaction in a way that really incentivizes exploration. And so Jason talked about the terms broadly. I mean, there are commitments to complete the earn-in, nature of an earn-in, for Foremost to spend on the exploration of these projects. And so overall, we're talking about $20 million in exploration under, in the event of the full earn-in being vested. And so that's sizable, and that's very interesting to us. Secondly, we have the technical side of things. So Foremost is partnered up with Jody DeRogue. Jody DeRogue is a very capable explorer, not just in uranium, but also in uranium and in the Athabasca Basin. And so having the commitment to spend money is one thing, but then having identified a party that will be able to actually lead that work or support them in leading that work capably was also very important. And the third part was the fact that Foremost has done all of this incredibly hard work to obtain a listing on the NASDAQ exchange. Denison, we are listed on the NYSE American exchange, and we do have an incredible following of US shareholders. Of course, we have many larger institutional shareholders in the US, but we have a very active following of more retail-based shareholders in the United States that will trade on our DNN ticker. So Foremost is traded on the NASDAQ under the symbol FMST. And we think that makes them very unique because they will be the only, and they are now, the only Athabasca Basin explorer with a US listing. And as the clean energy transition narrative and even just the idea of Western sources of uranium supply continues to sort of echo and resonate in the United States, investors are looking for other ways to be exposed to this commodity and industry. And some of the mature options like Cameco are hard for folks to buy. They see a significant share price movement has already occurred. And so we do believe that there will be a wave of interest in the exploration space. And by being US listed and partnered with Denison and our extensive US following, we do think Foremost is really well positioned to make sure that we maximize the value of these assets. And why does that matter to us? Because it'll reduce the cost of raising capital in the future for us to do more exploration of these projects and ultimately make a discovery that we just were not going to make because we weren't going to work those properties in the next few years. So that's the big picture, and we're very pleased to have put this partnership together.
Yeah, and this big picture has layers. So this cooperation is actually on multiple levels: technical, operational, even financial side, right?
That's right. I mean, we became a 20% shareholder in Foremost on the closing of the transaction. And then, as Jason pointed out, the company did an excellent job of accessing the capital markets, raising over $10 million in financing. And we participated in a way that basically tried to maintain our level of investment in the company just under 20%. For us, again, it's basically a discount on exploration in that we're supporting them at that 20% rate. But then, of course, the capital markets, seeing the benefit of these projects, supported them in the balance. And now we're funded for exploration. And to think, and Jason said it almost like it was nothing, $6.5 million budget for exploration next year. That's a very sizable budget for projects that are discovery ready.
Agreed. Definitely nice budget for exploration company. Jason, do you have the exploration plans in place for those projects? And are you going first with the most advanced assets, or have you done any prioritization list for those projects?
Well, good question, Lucian. We are prioritizing. I just last week was at the Saskatchewan open house. I visited the Denison office there in Saskatoon. we conducted committee meetings and think tank meetings. We will prioritize um, the high priority targets for discovery. So, as Dave mentioned, um, uh, drill ready, discovery ready properties. Of course, we are always going to watch our budget, and you will see what we've prioritized. You know, we have drill permits already on Hatchet Lake, and we of course Murphy Lake. Uh, with the hurricane deposit, it's a hotbed of activity, as you know, and so these type of projects do get higher priority. We will be aggressive, but we'll also move along projects so that we're building the assets, the ones that have had less work, and most of these properties have all had historical work. Some millions and millions, like the ones I just mentioned. But there was discussions. Andy Yuckluk, who is on our advisory board, and Jody DeRouge were thinking, and Jody, who has been past president of Fission, and he's found discoveries before, is very interested in our CLK project. So this is on the western side, and there has been, although historical, a discovery hole on that project. So he would like to go and make sure we drill that this year. So lots of projects to prioritize, and you will see us be responsible, but give the projects that have the highest probability of discovery the attention with the drill.
That's fair
And
enough. Y-
maybe just, Lucian,
Yeah.
I was there last for that meeting and the technical committee meeting that Jason's talking about. It was really an interesting dialogue. You had Denison's VP Exploration, Andy Yakaluk, together with Jody DeRouge talking through the targets. But what was incredible is that we're talking about a $6.5 million budget. And so that really does give Foremost a lot of options. And some of the things Jason's talking about are very important for an explorer in this region. We all want to pursue the next highest priority target that could make the discovery. That's everyone's passion. But to have that kind of budget, it also means that we can work projects that will lead to the next target. And that's sometimes a real challenge for smaller exploration companies, and why it's important that Foremost already has this really sizable scale, because you might not find it, as much as you want to on those first holes on the high priority target. And sometimes it's that third or the fourth target that's in the inventory that actually has a very clever idea behind it. And you might need some geophysical surveys first before you can really target it sensibly. And so that's the kind of stuff that was under discussion. And I'm very pleased with the budget size, because it means that we can have a long pipeline of very attractive targets on what are really interesting projects, instead of it just being a company that's acquired one property or one property on option that can test one idea. And if it doesn't work out, guess what they've got? Nothing. These guys, the properties have so much depth, and the multitude of properties and the work that we're going to carry out in 25 will mean that we have a great depth of targets for continued exploration. And then we can be picking amongst the best targets instead of just exploring the only target. And that's something that when companies start up with real small positions, they have their best target is the only target. That's really tricky. It's hard to get shareholders excited about that. I think and plans are still under development, but Foremost is going to have a year's worth of activity of multiple things with that kind of budget and this kind of portfolio. It doesn't risk the idea of, going out, drilling your hole in the winter, and then having nothing to do until 12 months later. That's hard for a shareholder to be holding that stock. We want to give them activity. We want them to see that this is robust and they have great things to work.
Yeah, Jason, is the plan to engage to start with new modern techniques of exploration on those projects, since some of those projects were not explored for many years. So you plan to have exploration program with new techniques, new technologies on those projects.
Yes, modern exploration, 100%. Not only have some of these projects not had modern exploration, but lots of exploration. So there's lots of data to help you prioritize targets. But yes, you know, I feel the modern helps with costs too. So you can find your targets easier with the modern technology. So 100% will be doing so. And then we do have uh, Andy Yakulak, who you know, Denison, their team has made a lot of money for investors and found the Phoenix and the Griffin deposits. And so they know how to go about these things. And then Jody DeRouge of DeRouge Geological, who's our chief exploration person, really knows his way around it too. So yes, all the modern technologies that I feel they save the company money and they increase the probability of targets and of course discovery.
Yeah, Jody DeRouge is very known name in the exploration business, especially in the Athabasca. So having him on board is can really help. I agree with that. So let me just conclude the financing part. So you raised 10.5 million financing in November, and you have 6.5 million exploration budget. Does that mean that you are, let's say, covered for 2025?
Yes. We're covered for 2025, and we will if we have a discovery, though that budget will increase.
Of course.
And so yes, we're covered. We're well financed, and I'm happy to uh, tell you about that. We also, insofar as the financing, have great investors. We and then numerous uranium funds, and so we do have backing, and I plan to make money for these funds as we go and execute our plans at foremost. And so we'll have future backing, I feel, no, in the future.
Well,
Okay, yeah,
Lucian, maybe just if I could layer in,
please.
the company is really well financed with this capital raise. I think it's fair to say that Jason and I are both a little disappointed with the way the share price has performed subsequent. But so disappointed that I've actually been a buyer of the stock, and that's all reported, on SEDI. And so I do think this is a really interesting opportunity where the company has basically been reborn, new asset mix, significant portfolio of these prospective Athabasca exploration projects, and then immediately well capitalized. So investors that are looking at the stock today can see a company that does not have an equity financing coming up in the next 1, 2, 3 quarters.
Yeah.
Will be able to drive execution of exploration, tangible, significant exploration work. And the signal that there's a buying opportunity couldn't be more clear than you're seeing insiders buying the market. I mean, not only was I supported the financing personally, but I bought subsequently in the market. So I think that's a strong indication, my view on the prospect of the company, but they have really set this company up to have a very good run here and to carry out real exploration. So I think this, it's been really nicely done. Maybe the opportunity is the fact that the share price has been a bit soft on the back of the financing. For anyone who wasn't in the financing or those that were, there's an opportunity right now in this stock.
Yeah, agreed. Gents, I want to touch on the first, Jason, can you tell me more about your lithium assets? What's the plan here?
So lithium assets, we have lithium assets in Manitoba. We think they're amazing. We had a drill program where we hit earlier this year. These assets are there for when there's a turn in the lithium commodity. Uranium commodity is doing very well, and this was a transformational deal. So we're still in the clean energy fuels business. In Manitoba, our assets, there's not a lot of cost associated with keeping them there, so we will revisit them in the future. And we are 300 kilometers away from the Tanko mine, which is one of only two North American lithium mines. So there's a lot of potential there, and I love our lithium assets, and but they don't have a lot of cost to hold. So this transformation into uranium is really good for investors and for the company.
Yeah, and you are in the process of spin out of gold and silver assets, if I read correctly. What is the plan? What are some timelines with that spin off?
Yes, so the spin-off will be voted on. It's called the Plan of Arrangement on our annual general and special meeting on December 20th. And that's when the government will decide to approve us. Our listing statement is in, and we plan to list those shares. You'll get 2 shares of Rio Grande for each 1 share of Foremost. So that's quite quite good for investors. And I don't think it'll be long in Q1 of 2025 to get up and listed on the CSE. Although you do need all approvals, but these are well in hand. So it's here and now. You can get the 2 shares and the properties in New Mexico. These are high-grade silver and gold, previously in exploration and previously producing mines in New Mexico. So, being a clean energy fuels company, we weren't getting a lot of value. So in order to monetize it, we can spin it out, as you pointed out. And this is a great way to monetize on some assets that we don't feel we're getting value to. So the sum of the parts are worth more.
Understood. Gents, 3-minute overview on commodities. First lithium, then uranium. Jason, you cover lithium market. When we will see better days for lithium?
I think it's bottoming. I think it might even be having a double bottom. I feel that the oversupply will soon subside, and you'll start to see upward pressure on the commodity. I don't know when in 2025, but I do feel that it's looking good for that. On the uranium front, well, I don't think the spot really represents, but Dave can speak more to this. I don't think the spot really represents what's going on long term and the long term contracts. And I feel we're in the early innings of a long-term bull market because demand, well, it seems to be increasing, and we know there's a supply deficit. So the spot, I think, will finally start to move in the right direction, and that's upward, and that there's a real long-term bull that we're in the early stages of. That's
Yeah,
my opinion.
yeah. Dave, I saw you attended Cancord's annual Global Uranium Equity Summit. How was the vibe there, and what were the hot topics?
Yeah, it was a really well attended event. I don't think we could have fit any more meetings in than we did. We had many meetings with 3 or 4 accounts at the same time, so it was almost exhausting. Yeah, the sentiment is curious from a lot of people. Everyone's very positive on the fundamentals. I think, as Jason touched on, the demand story probably has not been better in a very long time, if ever. The growing global consensus around the utility of nuclear energy is really incredible. There are many cases that aren't even being reported on of countries and utilities pursuing expansions of nuclear power or renewals or refurbishments because there's almost too many that it's the news cycle can't capture it. Certainly was headline when we saw the tech giants do the calculus on how they are going to power their incredible increases in energy consumption, and doing it without burning fossil fuels. And their calculus and their calculations show that nuclear energy is an excellent fit for sort of reliable, cost efficient, always on energy that doesn't kill the planet. So that's been very positive. What people are curious about is the spot price. The long-term price has been steadily increasing over the last 2 years, and the long-term price is now higher than the spot price. That's actually not that abnormal a situation. I think if you're a uranium historian, you'll see that that's often been the sort of normal situation. But people, of course, follow the spot price, and there's obviously an interrelation between the way the spot market and the term market function. People do have to remember that the term price is not just a pricing of long-term contracts. The term price reflects the price of a base escalated contract. And so there is sometimes less activity in that space because not everyone is signing a base escalated contract. They might be signing a long-term contract that's market related. So there are a lot of moving pieces right now in pricing. What we're generally experiencing, though, is that the level of buyer activity has cooled through the summer and through the balance of the year after a bit of a flurry in the first part of 2024 when we saw the spot price breach the sort of psychological $100 per pound level. I think the cooling has multiple reasons for it. We obviously saw a lot of discussion around Russia, Russian waivers. So many of the buyers were waiting to see how the waiver process would go. They were then granted their waivers for the most part. And so any level of urgency, most of the waivers were granted for near term. So any level of urgency that might have come out of that was cooled. We've still seen some utilities be reluctant to purchase at these prices because they believe prices might soften. And this is a curious part to me because there are really only one population of real buyers in our industry. There are intermediaries, but there are only one population of real buyers, and that's the utilities. So funny how it goes that when the utilities are not buying, the price sometimes goes down. But when the utilities buy, the price sometimes goes up. We have not seen the number of RFPs that we expected to see.
Yeah.
And the stats don't lie in that the contracting that's occurred thus far in 2024 continues to be way below the replacement rate of contracting. So it tells us that the buyers have just not been buying. Now, yes, they have other sources of supply and they have existing contracts and they have inventories, and some of those inventories will be used and replaced. But if we're not achieving replacement rate, it means that the hole is getting dug deeper this year. And that's on top of a hole that was already dug deep last year. And so, the conviction should not go away from anyone. What we need to see is buyers act. And sometimes the buyers don't act together. And then because, it's self-fulfilling. If all the buyers aren't buying, then the price goes down. That feels great for those who want lower prices. But at some point, the buyers buy. And when one of them buys, the price might move up. If two of them buys, it moves up a little more, and that sort of thing. And all of a sudden, everyone who is benefiting from no buying realizes actually we actually still need to buy and we still need to achieve replacement. So we are patiently waiting for some of that to materialize, but the fundamentals remain incredibly strong. The supply side is having a very difficult time. If you look at the restarts that are happening, even just between projects in Namibia as well as the United States, there's not one restart that's on track that I know of. And I apologize if there is one out there that I've missed, but most of them are behind schedule. They're over on costs and they're under on production. Those are all unfavorable developments for supply. And those customers that are counting on a big supply response, I think they have to think twice about that.
Yeah.
And the reality is the things that are responding were once shut off. The market has not seen significant new sources of supply, and it's unlikely to see that until Denison delivers on our Phoenix project and NextGen with Arrow. So what are the assets that the market's relying on right now for incremental supply? The assets that didn't make it through the last cycle. the assets that were shut off that are now having to be, reopened and brought back to life, and hope that they are able to achieve, economic rates. I think the reality is many of them will struggle, and that will tell us that the price that we see in the market is insufficient to be able to support the supply necessary. You'll have a few outliers, like the Denison and NextGen, but for the most part, the market needs higher prices to actually bring the supply necessary forward, and we're seeing that.
Yeah.
Maybe just quick on lithium. Sorry to be so long, but we are bullish on lithium. We have a small lithium investment in Denison outside of Foremost as well, with grounded lithium project in Saskatchewan, close to home for us. Look, we think sometimes we think there's a great opportunity to be a lithium investor and to maintain and hold lithium assets like Foremost is doing, because we do see better days for the lithium market ahead. And I just point to one thing on this, which is in North America, we get caught up in North American EVs. And EVs go up and go down in North America in their popularity. What is happening globally is a bit of a different story. And so EV growth continues to move positively, particularly in China and Asia. And so lithium demands are not decreasing. Maybe the speed of ramp up that was projected is slower globally because of maybe a false start in North American adoption. But we do think that the global picture for lithium will bottom, and then we will find a better ground higher from where we are now. It might take a few years, but we do think the lithium's a viable commodity in the future. And honestly, North American lithium is an important development if we're going to have a North American EV industry that can compete and be competitive with the internal combustion engine on price. That's one of the things. These batteries are not light. We need to be able to make batteries from a North American supply chain, and we need to have North American lithium production to do that.
All good points, David. All good points. Gents, I want to thank you for coming to my show. Great chat. We learned a lot about Foremost and the plans for the 10 projects that are optioned from Denison. I wish you both luck, and we will update shareholders, new ones and the old ones, as soon as possible. Thank you, gents.
Wonderful. Thank
Thanks,
you.
Lucian.